Hi guys, good morning and thank you for tuning in to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate the trading session with actionable strategies, sectoral trends and most importantly, we'll be addressing your queries during the show. So please keep commenting on our live feed. We'll have them addressed by our technical expert. But before bringing our guests on board, let's look at what the global handover looks like. As far as Europe is concerned, the losing streak continues there. You had key bourses shutting shop in the red. Fears of more aggressive interest rate hikes from the US Fed and the ECB returned to the fore and marred investor sentiment. Stoxx 600 ended 1% lower. DAX skid over 2%. CAC was down nearly 2% as well. Stock futures on Wall Street inched higher in overnight trading after stocks finished their worst day since June. Wall Street's summer rally faded amid mounting rate hike concerns. Asian markets trade lower after Wall Street's sharp declines. SGX Nifty down nearly 0.5%. Stocks in the spotlight today: IIFL Finance, Tree Hotels and NTPC. All right, first let's get going and talk about the big story of the day. Hari Priya from my Money Control team is here to talk about what's happening in the IT space, how IT giants are trimming and or deferring employees' variable pay. Hi Hari Priya, morning and thanks for joining in. Talk to us about what's happening. We had an exclusive story wherein we found out that Infosys has also joined the bandwagon and they have also cut or revised downward employees' variable pay for certain category of employees. Why is that happening?
So, first of all, Infosys has set that across the organization. The average variable pay is at about 70%, but the variable pay changes depending on what pay grade they're in and what department they're in. So some employees have said they've got 55%, some have said they've got 65%, and so on. Infosys, in its email to employees, has primarily attributed this to its pressure on margins, which it said is because of the investments that it's made in talent and the compensation revisions that it's done, because it gave salary hikes to a large number of its employees in April, and some of its senior employees will be getting it from July 1st as well. So that's what Infosys has attributed it to, and its operating margins was about 20.1% in the last quarter. And even at that time, they had said that the employee costs, rising employee costs, was one of the primary reasons that there was pressure on margins.
Okay. And how does this stack up compared to what its other peers have done, TCS and Wipro, etc.?
So TCS primarily has deferred variable pay by a month for about some category of employees, but it hasn't. There has been no talk about it reducing variable payout due to pressure on margins, etc. Wipro, on the other hand, has said that for any employee in band C and above, they won't be getting their variable pay this quarter because their variable pay is linked to the company's financial performance, and because the performance this quarter hasn't been that great in terms of margin pressures, Wipro will not be giving variable pay to those in band C and above, or which is the mid-manager level and above. For junior employees, they've said they'll give up to 70% of the payout, but it primarily impacts mid and senior level employees because variable pay forms a larger chunk of their compensation.
Okay. But what is the knock-on effect of this going to be on employee morale and attrition? Because attrition has been an issue that all of the IT sector has been grappling with for quite some time now.
So employees, obviously, I mean, they're not going to be very happy about it, especially at senior levels. If 30 to 40% of your compensation is linked to variable pay and you're not going to get a significant portion of it, it's obviously going to affect. Attrition concerns are, of course, there because Wipro's attrition was about 28.4%, TCS was about 19%, and Wipro has actually slightly sequentially come down from last quarter. But if they're not giving variable pay to all their mid and senior level employees, that's bound to have an impact in terms of we might see an increase in attrition for this quarter because of this move.
Right. But overall, what is the commentary looking like? Because essentially what we are given to understand is that the move is to defend margins. Now, like you flagged off, attrition is going to be a concern as well. So what lies ahead in terms of key headwinds to watch when it comes to IT giants in the next few quarters of this year?
In terms of headwinds, in terms of rising employee costs continue to be the concern for IT companies, right? Because they still have to take care of their attrition numbers. They've said that it's slightly started to come down sequentially, but they're still, I think, significantly higher than what IT companies are comfortable with. And margin is obviously continuing. And they've said that the talent that they've been hiring is at a significant premium. Like, for example, if they're backfilling attrition, they're hiring someone at the same level, but they're giving them significantly, say they're hiring them at a 30% premium than the person who left. So I think those continue a lot. So primarily about compensation revisions and backfilling attrition. They have slowed down on fresher hiring a bit, and they've said that pyramidization is sort of where they'll be, so that they'll sort of look at broadening the base of the pyramid in order to manage costs.
You know, something interesting that I was reading in your story yesterday was that Infy had said in its letter that they're looking to fuel growth momentum with investments in talent through hiring and compensation revisions. Now, how will they walk this tightrope? Because attrition plus, defending margins, they're, yes, cutting or holding back variable pay, many of these companies, not just Infosys, but it is going to be tricky, right?
Of course, it's going to be tricky, but the reason they're saying, I think they're hoping that with these investments that they're making with terms of, obviously because the talent crunch still is very much there. They still need the people to sort of service the deals that they have. And if they're hiring the right kind of people and hopefully if they can make them stay on, that would be an investment for them and it could pay off. But at this point, if they're not giving them variable pay, that's obviously a concern. They've obviously said that it's because of the investments and the compensation revisions that they've made. And unless the compensation revisions were sufficient, it could be an issue. But also the fact that hiring in general is slightly slowed down. It's not. We don't see the crazy kind of hiring that we saw, say, last year. So even if employees were to move, there are obviously concerns about how much they can shift. But obviously, attrition is significantly higher than what IT companies would like them to be, given at some levels it's well above, say, 25%.
Okay, all right. How about the margins now going forward? We know how the commentary was in Q1. In some cases, it was better than expected and largely status quo. So if this continues, does that mean we could see some revision in forecast for the year as well going forward, perhaps in the September quarter numbers?
Maybe, but I feel even though the commentary was upbeat, I feel like most of the management was also still slightly cautionary, where they said if they're given a guidance, they said that we are at the lower end of it. I feel like because there are, obviously US recession concerns are still there, and this is a big market for these companies in that sense. So it's not like things are dynamic and changing, so I think that they still continue to be a little cautionary in terms of promising and delivering, because obviously wage hikes are dynamic. In terms of employee costs rising, is something they can't control. Travel costs are returning as well, so they obviously do have a lot of costs that they have to take in consideration. But so far the deal pipeline looks good, so maybe it will help them in that sense. But I think it remains to be seen, but I still think they will maintain that slight caution rather than being very upbeat about it.
Okay, well, thanks Haripriya for joining in and for giving us a deep dive into what's happening in the IT sector and why they have decided to cut and or hold variable pay for the quarter gone by, and what could be the impact on margins and attrition and the employee sentiment overall. Let's change gears and talk about the technicals of the market as well. Shrikant Chauhan from Kotak Securities joins in to talk about all that and more. Morning, Shrikant. What's the trade setup looking like? Tomorrow is the monthly expiry as well. Queues are not good globally, but what can we expect back home?
Yeah, good morning, Karunya. Good morning, everyone. I think, see, the markets are following to the macro factors, and global equities are down substantially in last 3-4 days. US markets were also closed on the lower side, but if we go through with the option statistics, then based on that, our markets are turning oversold. So in the short term, or maybe in the very short term, we are expecting market to rebound after hitting the levels of 17,350 or 17,300 levels. So between 17,400 to 17,300, the market is having excellent support based on averages, based on option statistics. We can keep stop loss at 17,200 for creating any long positions or for taking any contra view of going long in the market. We are again expecting rebound in the short term to the levels of 17,600 or 17,700, where the market has spent maximum time. So broadly, if there is any lower opening, then we should be buyer in select companies or on the index.
Okay, all right. Let's also talk about some stocks that could be in news today and how they could be playing out today and in the next few days as well. First up is IIFL Finance. Its subsidiary IIFL Home Finance has approved allotment of close to 54 lakh shares to Abu Dhabi investment firm ADIA, its arm essentially, for a sum of 2,200 crores. And after this transaction, ADIA will hold 20% stake in IIFL Home Finance. So a big deal, a big transaction taking place there. IIFL Finance, there was some fund selling as well, which took place a couple of days back, and now this development coming in. Talk to us about the technicals. Do you think it's a good bet to sort of keep on your radar?
Okay, fine. I think you are talking about IIFL Wealth, which is trading around some, which is trading at some 1680 levels currently.
IIFL Finance. IIFL Finance is what I was referring to.
Okay. So here it is like indicating us that the stock is around 1680, and there we are expecting stock to trade between the range of 1900 and 1400. So broadly, it's a range bound stock. And if there is any specific deal, and after that deal, if the stock sustains above the mark of 1600, then we can expect rebound to the levels of either 1850 or 1900. Broadly, we are positive on the stock, and we should be buyer if there is any correction or if there is any weakness or decline because of the block deal.
Okay. The next stock we want to focus on is NTPC. They've declared first part capacity of 10 megawatt out of 20 megawatt Gangadhar solar PV project in Gujarat on commercial operation. Now with this, group's installed and commercial capacity of NTPC will become close to 69,500 megawatts. Let's talk about the technicals of NTPC and the stock move. Last 3-4 weeks, I mean, since the start of August, largely the stock has been range bound, has been hovering around those 155, 158 levels. Do you foresee any kind of action either way is happening here?
I think the stock is very clearly into uptrend, but because the beta of the stock is very, very low, we are of the view that it is going to consolidate, or it is going to spend some time between the range of maybe 160, 162 on the high side and 150, 152 on the downside. But broadly, we are of the view that it is heading for the levels of at least 180 in next few weeks. So it will take time, but certainly it's a buy. If there is any correction because of weakness in the market, then we should be buy. And this particular news is certainly positive for it. So if there are any long positions, then just hold on to that.
Okay. What about Lemon Tree Hotels? They've signed a license agreement for a 65-room hotel in Karnataka. Now, this particular branch, or rather hotel, will be operational by May 2023. And it will be managed and operated by its subsidiary, Carnation Hotels. But what's happening with Lemon Tree's stock price and its chart? Because it has come under some pressure of late. Will that downward trajectory, could that continue, or do you think we could see some rebound there?
See, like again, one more acquisition or joint venture is always create some problem in the short term because it increases to the debt level, and maybe because of that the stock is falling from the heights. Broadly, we are of the view that this particular industry should do well, but if at the initial stage, if we see the companies starts involving into this sort of acquisitions or some joint ventures, then it may impact to the overall balance sheet and maybe to the bottom line. But if in case the stock falls to the levels of 60, 62, then the stock is having very good support on the long-term charts, and between or around 60 levels, we should be buying.
Okay, all right. I hope our viewers are taking note of that. Let's also bring on board some of our viewers' comments and queries. Want to highlight IRCTC. Typically, we get a lot of traction, a lot of comments and queries on this particular counter. Talk to us about your view here. We've just got a comment from Varun, and he wants your advice.
Yeah, I think a lot of retailers are interested in the stock, and they have bought at lower levels and also at the higher levels. But currently, the stock is trading at the median level of the entire range. If we go through with the chart of last 6 months, then it is forming some rounding bottom sort of formation, and the news flow is also positive for the company. We are of the view that we should be buyer if there is any correction, or even at current levels, 710 or 12. Technically, we are expecting stock to move to the levels of 800, 850 in next few weeks.
Okay. What about Tata Motors? Krishna has posted a comment and he wants your view. Last 2 weeks from 490 levels, the stock has cooled off a tad, right now just above 450. Do you think there could be some more weakness before it meaningfully rebounds?
I think the stock has already corrected from the highs of 500 to almost 450. But while looking at the flows from the European markets or from the European countries, I think the stock is going to remain under pressure. But technically, the stock has broken its important support area around 460. So the chances of hitting 440 or 430 are very high. Close to 430, the stock is having very good support. There we should look for adding some positions. But at current levels, we just stay away. Or if there is any rebound in the short term, close to 470, 74, then there we should look for exiting out of long positions.
All right, okay. The next stock we want to bring out is PVR. Parth Chaudhary has sent us a request for you to address this counter. It has cooled off quite a bit from its 52-week high of 2,200 odd rupees. Right now, just below that 1,800 level. Do you think it's a good time to enter?
Yeah, I think the stock has spent a lot of time around 1,700 levels in the month of May and June. It is again approaching to those levels because the stock is falling vertically after hitting the levels of 2,200. So I think close to those levels we should be buyer with a medium to long term view. In the short term, we are expecting stock to remain under pressure till some new hits come in the near term. So we are expecting stock to find some stability around 1,700 levels, but at current levels, just stay away from taking any short term position.
Okay, all right. What about sugar sector? We have some requests coming by for any of the names that you want to flag off from the sugar basket that look good technically.
I think from the sugar basket, two stocks to watch out for. First one is Praj Industries because it is not directly related to the sugar, but it is indirectly related because it's a engineering company. It manufactures the plants and all, but broadly, I think this particular company is going to do well in the short term, in the long run. The fundamentals are also improving on quarter-on-quarter basis. The stock is stable above the levels of 370, 75 since last so many weeks. So there, our view is bullish, and we are of the view that it is heading for the levels of at least 400, 450 in next maybe few months. And in the long run, the stock is going to deliver some handsome return to investors. So we should be buying in Praj Industry, but other stocks are highly sensitive, and the overall trend of these stocks depend upon the prices or maybe the news flow for the sector. So for the time being, just stay away because all the stocks are indicating us that furthermore fall is due in the near term.
Okay, all right. How about Tata Steel? Devyansh Thakur is posting us a comment and he wants your view here. It has come off almost $50 from its 52-week high. Most people we've spoken to with respect to the metals pack have been rather cautious, but there have been some exceptional names they've flagged off. Do you think Tata Steel could be an exception, or is it a no-go right now?
I think all the commodity stocks are under pressure, and if we see the dollar is moving to the levels of 109 and other energy prices moves upward, then we can expect some selling pressure or some liquidation in commodities, because certainly the Fed will take all these energy prices into consideration, and they will again start increasing rates some harshly. So that's why I think the commodities are under pressure, and we are expecting furthermore weakness for all the commodities in the near term. 98, 96 are the levels where we should look for adding some position on Tata Steel, but at current level, just stay away. If there is any rebound to the levels of 107 or 108, we should be seller in the stock.
You know, yesterday when the entire market mood was rather muted and a tad negative really in line with global peers, Adani Group stocks were looking very resilient. One of them was Adani Green, and we have a query as well from Gayatri. She wants your view here. How are the technicals looking? Because on the chart, if I see the last 3 months or 6 months even, it has been a one-way rally. Talk to us about the key levels to watch for this one.
Yeah, I think, Adani Green is really doing well based on technicals. It was consolidating, and later on we saw a breakout sort of formation. It has already broken the level of 2500 in yesterday's trading session, and even if we go through with the MACD or other oscillators, then they are indicating us that we are going to see further more activity or upward activity in the near term. We are based on technicals, we are projecting the targets of 2800. So just hold on to the long positions, but adding positions at current level is also not advisable, because it is far away from its recent support levels of 2200. So if there are any long positions, then just hold on to it.
Okay, all right. How about your own preferred picks, Srikanth? What are the names on your watch list?
Yeah, I think in the short term, we are going to see further more weakness, maybe from those companies which are part of index. And that's why we are of the view that we should look for creating some short positions on SBI, because after the result, we saw a lower top, lower bottom sort of activity for the stock, and it is consistently finding resistance at every high. Yesterday also the stock was down, and based on technicals, we are expecting stock to fall to the levels of 495 or maybe 490 sort of levels. So it's a sell at current levels with a stop loss at 518 on the high side. And from the broader market, we are expecting a few stocks to rebound after hitting the lower levels. So in that, we like Aegis Logistics, which is around 245, 248 levels. There we are expecting rebound to the levels of 265 or 270. So we should be buyer in Aegis Logistics around or at current levels with a stop loss at 240.
Okay, so one sell call coming in on SPI and a buy on Aegis Logistics. Thanks, Srikanth, for flagging that off for us, and also for joining in and sharing your views on the market and addressing a host of our viewer queries. I'm sure they're all very happy with the insights and the views and observations that you've shared with them. With that, we're going to wrap it up right here on Morning Trade. Thank you so much for watching. Stay tuned to Money Control Markets with Santo and CJ comes up next.